Well, everybody, U.S. dropped some bombs, and we satisfied the correction on Bitcoin. Look at that. Potentially finish that up right in the target. I mean, sometimes I get lucky on that. And for those of you, if you have the supercharge alerts, you might want to close that out. Might be time to flip it back to a long position on Bitcoin. So we finally got that lower low I've been looking for a long, feels like a long time right there. That satisfied that condition right there. Cha-ching. That's all we needed. That was it. Hey, everybody. David, Don, Craig, Rob, Ed, Will, Gary, Cliff, Arturo, Frank, James, Mad, Scott, Mark, Sledge, Ted, Skaggs. Good to see everybody. You know, I typically stay out of the politics stuff because it doesn't seem to matter, right? I mean, look at this. Look at this chart right here. If I told you that Israel was basically starting World War III with Iran, would this be the chart that you would expect? And then the U.S. jumped in based on news. I mean, based on the history. I mean, maybe because you've been here, you know that the news doesn't make the chart. But is this the kind of chart that you would expect the last week right there from the S&P 500? Most people not. I mean, most people think that war is bearish. You know, typically, initially, it's bearish. I mean, in fact, we got a gap down last night, but we took it right back. We're basically flat. Basically flat coming into the open this morning. Slightly, 8 points up. And, I mean, this doesn't look like the chart of a potential World War III starting off. It's kind of crazy. At least not, psychologically what you would think. So, interestingly enough, I was kind of poking around with some Elliott Wave stuff this weekend, and Daniel Crosby, he wrote The Behavioral Investor, and in that book, he noted that trusting in common myths is what makes you human. Like, we all believe those market myths. We all perpetuate them. We all say them, right? Like, there's things about the market, causations and correlations and things like that. We get sucked into narratives that, oh, the news was baked in. Oh, the market's going to react negatively because we bomb Iran. We get caught into these common myths, and it makes us human. We love stories. We love reasons, right? The market has to move for a reason. And in fact, it amuses me constantly when somebody asks in Discord, why did the market move? What just happened to make the market move? And sometimes there are no reasons. And learning, the rest of the quote is, learning not to believe the myths is what makes you a successful investor. So if you can decouple your mind from the news, from the narratives, from the world, it's very, 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 very difficult to do. But if you can decouple and just pay attention to the price action and where the chart's going to tell you it's going next, you can be a successful investor. Very difficult to do. Very difficult to do. Now, sometimes the fundamentals in the narrative line up with the chart, but sometimes they don't. Like right now, this chart is not going along with the main the big narrative going on in the world right now. This is the S&P for the last 2 weeks, basically, right here. Not really going anywhere. We're just sitting flat, hanging out, going sideways. churning along right there. Churning along. So, thanks for coming. Thanks for being here. I try my hardest to not get sucked up into mainstream media narratives and news and stuff like that, and to try to give you what I think is going to happen next. That's the whole reason I'm here. Now, looking at let's check in on the 50K challenge here. We've got the all-time clicked, coming up on 6,000. Looking at the year, I did take a loss on that VIX position. It's down in here somewhere. Yeah, right there it is. That's the VIX blurred out. If we look at hanging out at 6.4, not bad right there. Not bad. I did get put some shares over the weekend. Got a couple positions that were just barely in the money. We're going to see how those play out. There's one of them right there. Got put those shares over the weekend. And when we look at the profits, you can see that little dip on VIX, but we're right back to it. That's what I was talking about last week when I was talking about if you're going to buy insurance against a market drop, make sure it's small relative to your gains. All right, you can't take all these gains. I can't buy a position that's upwards of $6,000 to protect my $6,000. Like, then when that position blows out because the insurance doesn't pay, I'm back to scratch. Instead, I bought something that was like just shy of $500, it works out to be. And I was able to make that back relatively quickly. In fact, I absorbed the cost of it as we went along. I actually added to it a couple times if you actually look at the trades. Now, I have a position out to September to cover the next potential downturn. And while I hope it doesn't have to pay out, I think this one might pay out. I'm hopeful that my house insurance for my portfolio doesn't pay out. Like, I hope the house doesn't burn down. So you've got to change your mindset on buying protection positions. Now, everybody looks at like, well, during COVID, you went after it. And it's like, yeah, okay. During COVID, I did go after it. But initially, I just had a couple of these little insurance positions. When the insurance started paying off, I cashed it out, rolled it into a bigger insurance position, and kept doing that. I was in and out of like hundreds of VIX contracts during COVID. I think the last time I cashed out 150 contracts on straight VIX at like $22 profit per contract. I don't see that kind of event, unfolding right now, so I'm not rolling my entire portfolio into some sort of protection. I mean, we'll look at this right now. Despite bombing Iran, nothing really showing up on the chart to be concerned about at all. Even the gap down, we didn't even go lower low. We just gapped down, and then here we are coming in the open, down, up 4 points from Friday's close. It's not even like a market's just like, don't give up. More chop. What we've been talking about, like more chop. Funny enough, I got that axe still sitting here. We're just chopping. We're not breaking out. We're not breaking down. We're just chopping. At some point, we're going to do something. And right now, it's indecision. So keep it all in perspective. Don't get too bearish until we start breaking down. Don't get too bullish until we start breaking out. So we've talked about lots of things. There is a giant downside risk. That's why I have downside protection, insurance on. All right. I'm not going to mince words about it. There is downside risk. Does that mean we're going down for sure? Eventually, but not necessarily immediately. Eventually we will go down. Eventually we will take a bigger trip down. Probably be pretty violent. But right now is not the time so far. Like, the market's not saying now's the time. You can flip on the hat though. Like, we could, you can flip the coin and all of a sudden we start down. But right now, and that's why I've got proactive insurance on while things are just chopping along, being calm. S5TW, short term, we are highly likely to visit the bottom. More likely to visit the bottom than the top. That doesn't mean we can't pop back to the top. This is stocks above their 20-day. This tells me we are likely to get more chop and grind and push more of the S&P 500 stocks to the bottom, below their 20-day moving average. That's what that tells me right there. This is like a dashboard for the market. What do I expect? I expect some chop and downward pressure until we can get this S5 TW, stocks above their 20-day, below 20. S5FI, this thing topped out. Now this one has been known to grind the top for a couple months, even make a higher high before we take a trip to the bottom. So in the 50-day moving average time frame, looking at the stocks above the 50-day, we're still hanging out 63, 64%, still hanging out above the 50-day. It's possible we go up to a new high above that. We didn't actually get a candle close above. We did touch above, and that sets the odds that we're going down to the bottom. But this is not higher probability yet. Now, if we get below 50, odds are we're going to get that continuation down to the bottom. So if and when S5TW pushes down to the 20, this one will probably push down below 50, and then we'll set the stage. But it could still take a couple more months before we get down there. So this is still a zone of ambiguity. See right here, like, this is what I'm talking about. Like, we were at the bottom, we popped up to kind of the middle, and then we went lower right there. So we were at the top, we might dip in here and then spike something higher before we actually roll down. So this could take us into, this was first almost 5 months, 4.5 months of the year. It did start in December, so roughly 5 months it took us here. Got here mid-May. So June, July, August, September, October. That fits with the time frame, right? Like, we could be out here in October, like this could dip down and we spike up in October. That fits with my Bitcoin prediction, topping out in October. We could top out the S&P here and then get more trouble right there. It's kind of interesting how this all the pieces starting to come together a little bit. S5TH, this is stocks above the 200-day. We were at the bottom. We're still below 50%. And longer term, this probably going to go back up to the top. Now, we could grind the bottom for a while. It's entirely possible, but this one tends to hang out at the extreme for a while before we finally roll over and go. Tends to, but doesn't have to. We hung out at the top, for a year basically, and then rolled over pretty quickly. We tagged the bottom. Now we're back in the middle. So this is stocks above the 200 days. This is the slow boat moving average for the market. 200 days is almost a year. When we look at the stock market, come over here, pop it up 200 days, right? 200 bars. Roughly that's hanging out. My sensitivity here, 291 days. So 365 days in a year, 291 calendar days is 200 bars, roughly. So when we talk about the 200-day moving average, we're talking about 291 calendar days, roughly. About 300 days. So almost a year. Not quite. S&P, when we look at the daily chart here, market just opened. It looks like we're going to come back down to the daily roadmap line here. That's what price is telling me. That might push the S5TW to the bottom. Might create a big dip here. We could go a little deeper. That's possible. But then we'll probably rally on up into that October timeframe, along with crypto. So, just got to keep it all in perspective here. NASDAQ, sideways. We've been sideways since we got up here in mid-May. We've been sideways for over a month now, just not really being very committal. Russell here. This one has to me, it has the biggest opportunity to take a next leg down. Things could get very spicy. We're pushed below this uptrend of lows. We're going out here. There's not really much holding it up. We could take a trip down pretty violently, pretty fast. That's why my current protection is on IWM. If you don't have any of these, you haven't thought about these, something like a 180, 150 put spread. And could you go more aggressive? You go, yeah, cost you more money. You go more aggressive. You can go 190, you can go 200. I'm out to September. You might want to go October, November, December. Depends on what your time frame is. If you think we just chop along until October, it's entirely possible this just kind of messes around till October and then rolls. Entirely possible. We've spent long durations just chopping on this chart. Like, it can go sideways for a good long period of time. Yeah, that's March. Didn't go anywhere. April, May, June, before it started moving a little bit. So this could definitely go sideways for, it could be just, be like, not really move at all. Oil, crazy spike on the bombing news, opened up here, taking it right back down. I don't know. We need to clear that resistance to go higher. Back testing. I kind of fully believe that we're probably breaking out. And whatever reason the market wants to put to it, we're probably going to go cruising on up into the 90s. I see a lot of rhetoric that, Trump will keep this blah, blah, blah with Iran under control because he doesn't want gasoline at $4. I don't think he has that kind of control over gasoline. We've already got it on the chart that we're probably coming on up here. It's already on the chart. It's just a matter of how we get there. So probably coming up to $3. I don't know about $4. Well, $3 wholesale will probably be $4 at the pump. Thank goodness that my truck runs on solar power. Anyway, gold rush trade for the week. Kind of over. Hadn't really responded. Gold didn't seem to care about this at all. Like, no big spike, no big drop, no big nothing. Just kind of shrugged and nothing. Probably on the way down here. Then that, then that, then that, and a final move. Probably what we're doing on gold over the next few weeks, maybe months. Bitcoin, like I said, potentially. Now, I don't know for sure this was the final. This satisfied the correction I needed. Not necessarily done yet. This looks like 1, 2, 3. We might get a little consolidation and a final spike before we actually reverse. When we look at the all-time history, this looks more like First move, retrace. Second move. Third move, probably get some consolidation in here. Could take a day or three. This one took 1, 2, 3, 4 days. So this one likely to take a week or two. Final move down before we actually bounce. Now, I say that, but that met the criteria. We can be done. It can just rip from here. This is time to be very cautious on Bitcoin. Doesn't have to move big. Could just consolidate for a couple weeks. And then one more dip. Dip lower than that low right there. And we satisfy the conditions. But Ethereum, look at that. I mentioned that we might be taking a trip down on Ethereum. At 618 down just a little bit further at 2,000. NKD not providing any clear indication at all. Filling out that triangle that we've been talking about. It's kind of wild to me. It stayed in that triangle. This is global. This is a global liquidity indicator. If you're new here, it uses this just to kind of indicate what the rest of the world's doing. Japan being a large stock market. And this is the Japanese stock market futures. If this takes a trip down, we'll probably see liquidation in the U.S. market. Global liquidity is the only thing that seems to be tightly correlated to stock markets. When we see global liquidity decline, we see the U.S. market decline. We see global liquidity expand, we see the U.S. market expand. So right now, global liquidity chopping in a tight range, and U.S. market chopping in a tight range. Funny that way. Dollar grinding the low. Was that the final low? Unclear at this point. Still lower high. One move up does not make a new trend. Can't say for any certainty. Potentially working on a 5 up. If we get a 3 retrace, hold a 618. That may point to the next move being higher. We'll have to look for that a retrace back down in the 98.30 area. If we hold that and break higher, we might be heading on up to the roadmap line up here, somewhere around 102 on the dollar index. Checking in our Mag 7s. Apple still filling out this triangle. Non-committal, just has a big first move down and a potential to get continuation lower. We also have the 618 up here that we haven't touched of that first move down. So upside potential on Apple up here around 235 or 225. Downside potential, if this was the high, down here around 130, 140. Amazon popped up to that 618, just been grinding it for a whole month now. Potential to come down to 150. First move down, second move down. Google tagged that 618 zone. First move down. And if we get continuation, second move down, and it's starting to push down into that uptrend of lows. If we start breaking through that, which we are pushing the limits of right here, if we push through that, could take a trip down to the 120s on Google. Meta, deep retrace. If you rode this up, might want to consider some way to protect or book profits. Might take a trip back down to the lows again. Double bottom. First move down, second move down. Potential, while it does have the position, potential to pop on up to 783. I'd be very careful. We're seeing this across all the Mag 7s except Microsoft, which is likely to tag that upside target 46 right there. Got really darn close last week. Grinding in here. Highly likely to touch 46. If and when we touch 46, that might be the top, and we might actually get a big correction. This could come back down into the 425 area. This already did the first move down, second move down, so I'm not expecting another big downside lower low on Microsoft. NVIDIA, same situation. lower high, first move down, potential second move down, and this has a giant head and shoulders potential that could lead to a bearish continuation down in the 40s. Be very, very careful. What could cause that? Don't know. Don't care. It's on the chart. Be careful. Yeah, the joke is I'm perma cautious, but really, I'm just perma. I like money. Like, I don't like to lose my money, so it's not really perma cautious. It's perma. I like to keep my money, so perma profit, I guess you might say. Looking for opportunities. I'm kind of like, I like to take the best of the best type of opportunities. This one, on the small scale, has a first move down, potential for a second move down, but this could just be a roadmap bounce and we're going up. The 1.1448 extension right there. It's entirely possible. It's just a normal roadmap bounce pattern. If we close above this today, could be set for that 380 target right there. Possibly 392. And we consolidate and get some continuation higher. Robotaxi event yesterday came out pretty darn, no accidents, no problems. Everybody, tons of videos on social media. Seemed like everything went smooth as glass. Smooth as a calm day on the lake. No problems, no hiccups. I didn't see anybody report any problems whatsoever. So, pretty strong start for a limited launch. We'll see what happens moving forward, but it seemed pretty good so far. Bullish green day for, this is a whole new world. Look at it lift. Still grinding down. UBER, if I could spell properly. Uber and Lyft both have downside potential. So I go pull all the gainers, put it on the, this is things moving $2 or more up in the pre-markets. I run this before I get on here and I don't have time to look at it, so no idea what's on here. We hunt for opportunities, then I pull all the decliners, things moving $2 or more down. That's usually where more opportunities show up, and we'll look at that. And then I brought a couple setups that were ripe for an entry today. They set up the entry on Friday, entry trigger, and then I'll give you my bias for the day. So stick around to the end here. We'll see what's cooking. So CDX, nice big roadmap bounce, nothing to do there. Biotech pharma. Usually when biotech pharma is leading the list, it's kind of a meh kind of day. Another one, another pharma. Upside potential, 300. LEU. We're starting to stall out here. Be careful. If this doesn't spike another higher high and we just chop here, that's the indications that we're done on this move. If we just chop in here, I can take it back very violently right there. That's the bubble pattern. Get this big climb rate, get this chop. When we break down, bring it back very violently. Be careful. Be careful, be careful, be careful. Bye. Potential bounce here. Let's look at the one I got put now. DJT. This 830 is my cost, so I'm right at break even. Potential resistance at the roadmap line. If this, so this is a measured bounce with a potential to shoot right up here. We're gonna have to break through the roadmap line first, of course. And if we break down below 15, we'll look at what's up. But right now, this is the potential bounce I'm looking for. Break back above that, get continuation, targeting the 1618 extension of the measured bounce and the 618. Then I got to make a decision. Do I want to try and ride it on up, or is it going to bounce down? I have to make a decision there. And other things I have shares of, Rocket Lab, looking for this to get continuation up. Target's right up there. 36 for now. And it could pop bigger. So we could hit the 36 area, retrace, retest, and push on up. Possible higher targets. That bigger target 45 up there on Rocket Lab. I did get put shares last week on Rocket Lab. And then Merck, another one I got put shares of. Looking for this to rally up to the roadmap line. Right there. And unrelated question. I have a Starlink that somebody gave me. One of you awesome members gave me a Starlink system that you were upgrading and gave me one, but I don't pay for service currently. I just have it as a backup. So I have a cable internet. I live in an urban area, so I have cable internet at my house. And somebody calling me there. I'll have to call them back. All right. SPTN. Spartan Nash pushing down into the lows. Where's the current price? A nice big bounce. So for that to be continuation higher, we'll need I'll just grab the current fib. That high, this low. We're going to have to get a close above this 618. There's a little gap down there. So somewhere around above 30 to look for 40 on the upside there. Circle keeps being crazy. Crazy keeps being crazy. USDC. Next upside target, 268. I mean, maybe it's on the log scale and we keep going crazy. We could be 352, maybe even 500. Hard to say on that one. Eventually, it's going to run its course and get a big correction back. EXEL. Hitting targets, played out. Be careful on that one. NTRS, hitting targets. Yeah, could go on up to 125 on that one. DoorDash, hitting targets. Watch for the correction. 233 might be the next upside, and then 260 above that, which would be the all-time high. HUSA. Houston American Energy. Did a reverse split. Danger. Danger, danger, danger. Reverse splits are not bullish. That's 2 reverse splits. This is a dangerous piece of garbage. PTIR is PLTR. And grinding those targets. Next target up right there, 149. 10 more bucks up. FBRX. Reverse split. Piece of garbage. MPC. Hey, starting to turn here. We did tag the top of that target. If we can break above that 618 right there, get above 177, looks like we're going to get continuation on up to 240, maybe 260. AMD. Looking for this to do another retrace back down in the same vicinity. We found the bottom right here at the roadmap line, kind of. So looking for this to stall out, come down. That would be the opportunity to buy if you're looking for this next big breakout move. That would complete 1, 2, 3, 4, 5 up. Retrace, and the bounce potential. Upside target, probably up here. So you have to make your decision. Doesn't matter if you buy at 130 or 100 if you're targeting up here around 400. VRNA, I still got this nagging cough. I wish I would leave it behind. So VRNA just keeps being crazy here. That big consolidation, topping out. The last pullback. Okay. Still being crazy there. This pullback. Yeah, we're probably due for another pullback, but as you can see, this run right back here, big, huge, long rip. We could easily do another one of those. I could take it quite a bit higher. So off of that pullback, we get a move like this, playing off the echo. Could put it up here around 200. Zeta. That's a 3-wave bounce into the roadmap line. Watch for continuation lower, or if we can clear it and get above the 618 up here. And that 618 will pull down slightly to 24. So resistance at 24, 25, area 26, and right here at 16. So if we can clear that 16, look for resistance at 23, 24, 25, 26 area. And if we get above that, 46. But if we bounce down, continuation down in the single digits, around $9. CRMD. Yeah, so much biotech on the list today. It's crazy. 3-wave retrace into the lows, and 17, possibly to 24 on the upside. VDE, looking at, that's a downtrend. Be careful. We can break out. This could go on a big run for Vanguard Energy. ETHD, ultra short Ethereum popping up. We might see that hit the roadmap line if Ethereum continues to be kind of negative. We're looking at ETHU. If you don't have this yet, if we come on down into this 618 retrace zone, might be an opportunity to load up some shares for our next potential pop on ETHU. These are where PPLT, pop back up, get the rest of the advancers. This one probably going higher. I've talked about the fact targets up here 150, 160. And PAL starting to move a little bit, not really breaking out yet. Want to keep an eye on. This could be an up and comer. If we break out above the 618, we could get that move up into the 124 area right there. Decliners, hymns. Oh, wow. Got a big smack down there. Probably coming back to the roadmap line. Yeah. This may be a secondary roadmap line retest before we push on out to the target right there. So the leveraged ticker taking a big whack right there. MSTR probably going to retrace back down to the roadmap line. Just the price action I see here, highly likely to retrace into this area and then bounce. If we see continued softness on Bitcoin, this may correspond with that. ETHU, already mentioned a minute ago. NVO, working on that 618 retrace. We did tag the top of the box, or top of the target at the bottom. If we can hold this 65 area, sets up the measured bounce for a bigger go at bigger 618 zone right up there. Grab the 3-point tool, first point, second point, third point. Yeah, that might. So if we bounce here, resistance in that 79.80 zone there. And if we get through that, probably going to take it on up here, 117, before we do another consolidation, which could bring us back down to the roadmap line before we do that next move like that. That would be the ideal kind of proportions, but this is setting up in the chart right here. So, but if we don't hold this, could go deeper into the target zone down here. QBTS daily, QBTS. Probably going to get a retrace back down to the roadmap line at the minimum, if not something a little deeper. Coinbase. Yeah, riding with Circle. This one probably going to push on out. Target's right up in here. And if you're like, whoo, that's a little pricey, you have the opportunity to jump on some Connell, buy some shares here. This one, if we can get through this 618, we can push this on up. If coin goes on a bigger run, we might see this up 90 to 110. Now, leverage stuff doesn't always follow the patterns, so be careful there. ETHE, probably working on that 618 retrace. Right here, if we can get that, hold, bounce through the roadmap line, we could work on a bigger upside here on ETHT. IONX, probably working on a retrace to the roadmap line again. If we can pull that back on IONQ, probably see that upside, and IONX will probably go with it. RGC, probably coming back to the roadmap line. Carvana, that. So this is a common pattern we see where we pop up, hit the 1272, retrace to the breakouts, hold, which is what we did, and then go on to extend higher. 444 would be that extension if we're going to push it on out. Now, if we fail and break back below the breakout level here, highly likely we're coming down to the roadmap line on the downside. So 250 versus 444, that's a wide range right there. SMCX, 2x leverage on SMCI. And I still have further downside potential going on this one. This was the bubble pattern. This probably still is. Consolidated in here, consolidated in here. Probably still going to take this back down. Just, it looks like we're doing this consolidation right here before we flush it on down. I mean, it looks like the picture perfect, right? That we did that one, we're doing this one, and we may flush it on down. Be careful on that one. Rocket Lab 2x. That's crazy right there. This is actually more expensive than Rocket Lab. Rocket Lab's $30. The 2x Rocket Lab is $44. Kind of funny. I do have further upside expectations on Rocket Lab. Reddit coming up into resistance. Be careful, we might turn that back down. If we can get above that resistance, we might come on up. Key level right here. Key level of resistance on 153, 154, 155 area right there. Did do this little consolidation over here too. So it could go on up to 160. So we're kind of a resistance zone in here. We're gonna have to get through that to do the further upside. If we bounce down off of it, watch for support at the roadmap line. And if we get below that, could lead to further decline on Reddit. Boyle. And bounced off the roadmap line. Natural gas. Taking a trip back down to the roadmap line. Probably. It's starting to be kind of a grindy, overlappy thing that might take it on back to the high. Out through later this year. XXRP taking a big hit on the market pulling back on crypto. TSM looks like, well, it's got the setup to go on up higher. Like that's given on this chart. It's got the setup for 245. I just think that we might see this pull back to the roadmap line before we do that right there. Won't necessarily. I'm not trading it. 90% of the stuff I talk about, I don't trade. Probably 99% of the stuff I talk about here, I don't trade. Columbus Circle Capital. No idea what this is. Looks dangerous. Another one looks dangerous. SC. Watch for that to come back to the roadmap line. Toyota Motors. If we don't hold this 618 retrace right here, 1, 2, 3, this could develop into something bigger. So we're at this 618 right here. Need to hold this area. Could go as deep as down here. Want to hold that, break back through the roadmap line, then we can get further upside bullishness. Going to be resistance right there where we've topped out 1, 2, 3, 4, 5, 6, 7 times. Right around that 195 area. If we can break through that, bigger upside, maybe back to the highs. But if we break down through this, 160, probably coming down here to 150, 140 on the downside for Toyota. Restoration Hardware, still grinding in here. Looks like we're working on a 3-wave retrace right here. Would not surprise me to see one more dip right there. 159 before we pop the roadmap line. QNTM. Biotech. Danger. TEM. Has the setup to go up to 101. But that might revisit the roadmap line. And if we don't hold it, we may revisit the lows. ARQQ. It has the setup to go up to 65. QUBT has the setup to go up to 32. Setup's ready for action today. Here's the high, here's the low. Here's your entry, 37.94. Target right up in there. And then Kroger. Man, this one's just going to rally. All this. Here's the high, here's the low. 75.11, 76. And it could embark on a new, that could have been all the retrace it needed to take another grind higher. And if it does another echo of this, could be looking at another grind on up to 94 eventually. Probably not without pullbacks, but nice. See what the historical looks like on that one. Yeah, 45 trades, 82% profitable. The profit factor negative, though. Be careful. Wouldn't be for me with the negative profit factor. Wouldn't be a trade. Bias for the day. Caution. More chop. That's what that looks like. Chop, chop, chop. Might go back to the high right up here at 60.59. I just, I wouldn't expect much today. Like, looks like we're just going to be sideways-ish. Looking at the calendar. My goodness. Slew of European news. Existing home sales came in a little bullish. Got Fed Chair Powell testifying tomorrow. And Wednesday. Whole bunch of nothing. Core durable goods. And then get the PCE read on Friday. PCE right there. So we'll see what happens on Friday. So not a lot of stuff, and we may just drift into earnings happening. Hey, Terry, good to see you. Am I long UCO? I am long UCO. UCO. Got a couple long positions on UCO. Mostly long-term calls. Look for a pop up into this area up here. Short term, might get a pullback, so be careful there. All right, everybody. I'll be in Discord. I'll be hanging out. I'll be doing all sorts of things today. I got think there's a webinar later on today, advertising supercharged tickers. And have a great day. Be careful. The account you save, the money you make, hopefully it's yours.